Good afternoon, I'm Ed Pozzuoli, president of Tripp Scott, and welcome to another series of webcasts from Tripp Scott. And today, I'm so happy to be joined by Gary Joyal. Gary, welcome.
Thank you very much.
Gary, we sat down and spoke about your capital management company. Explain to our viewers what you do.
Joyal Capital Management is a private family office. We focus on handling really anything attached to a dollar sign for our clients. Our firm started approximately 30 years ago with the focus on estate planning, and that's really been the niche and the glue that connects our clients and ourselves together.
But now you go beyond the estate planning piece.
Yes, obviously the estate plan is the foundation. We've enjoyed working with attorney Seth Ellis for 20 plus years, and now his new affiliation with Tripp Scott, and looking forward to that relationship. But clearly the estate plan is the foundation, and as we accumulate wealth with our clients, we help them in all phases of that accumulation and eventually into the conservation phase of wealth.
So give our clients an understanding of a recent deal that you were involved with. I understand it was one of the largest transactions ever. So talk us through that deal and the role that you played.
We have a very strong representation with the Dunkin' Donuts franchise community. We're in 18 states. We are the largest in the United States for both debt placement, mergers and acquisition, as well as representation on the private client group side. But we're pleased to announce that just this past week we recorded the largest single transaction ever in the state of Florida for Dunkin' Donuts in a major roll-up of a group of stores on the west coast of Florida.
And what the transaction, what was that the buyer was from where?
Yeah, actually it's interesting because Dunkin' Donuts is a Boston-based brand. The buyer was Paul Fireman, the founder of Reebok. Started his own private equity group called Fireman Capital Partners after he sold out of Reebok. And the seller was actually based out of Boston too, called Boston Coffee. And like a lot of our clients, for estate planning purposes, they moved to Florida because of the tax-favored state, and they decided to accumulate wealth. But he was on his exit strategy, and we consulted through that process for the last year or so. And
so the estate and business planning aspects you were intimate with.
Oh yeah.
On behalf of the buyer.
They're all integrated, and again, we help our people set that foundation, and as they accumulate and they're ready to have a liquidity event, it's all part of that process of the private client group.
What happens next after that? What's the role?
Well, this is kind of a unique situation because the size of the deal, it pretty much went from Fort Myers all the way down to the Keys and into Miami. So it was a roll-up of close to 40 different Dunkin' Donuts locations. On that type of deal, we always want to look at the tax structure within the estate plan as well too. So knowing that it represented the largest asset in our client's portfolio, our focus was to provide a diversification so that's not all weighted in one asset class, but through a tax-free exchange, we're going to rinse and repeat into the state of Atlanta, Georgia, and start all over again with Dunkin' there.
Another set of stores.
Whole new group of stores, business to business, 1031 tax-free exchange.
And so not only are you helping put the deal and identify the opportunity, but then you also handle the growth, the opportunity
Absolutely.
To use that money elsewhere.
Absolutely, in a tax-favored basis, yes.
All right, and that's the kind of service that you've been providing a number of clients.
Absolutely.
For how long, Gary?
The firm is entering our 25th year. Been in the financial markets for 30 years, but 25-year anniversary is actually this June.
And you mentioned estate planning as kind of how would I say, the foundation of this.
Correct.
Why do you say that?
Well, a lot of clients, by the time we sit down with them, they've actually got their walls and their roof already established, but they've never taken the time to set the very, very strong foundation to protect their wealth, not only from taxes, but from creditors, and allow for proper succession planning. So our relationship with Seth over 20 plus years has provided a great impact to our clients and resource to them to put that floor in place and that foundation in place.
It's a great synergy.
Oh, we're like brothers, so yes.
You mentioned before a lot of northeastern money coming into Florida now. And
absolutely.
Why is that happening? I mean, why is the money flowing into Florida now?
Well, I think it's been pretty common knowledge that the state of Florida, as compared to Massachusetts or most of the New England states, is much more of a tax-favored base to accumulate wealth and to retire. So as our clients mature in the Boston market and New England area, they do want to have that transition occur so that as they're entering that conservation phase of their life, they're looking at tax efficiencies as well. And most entrepreneurs are very heavily concentrated in one asset class, and we try to help them diversify to protect against the up and downs of the market. So that's just one of our core philosophies of our brand.
Is it just taxes, or is it the business the opportunity here?
No question about it. And you know, if you look at the tax favored laws here, you look at the business environment, and you also, you know, weather has a little something to do with it too.
Sure.
Boston is a little bit difficult this time of year.
Especially this winter.
Exactly.
Well, Gary, we very much enjoyed the time we spent.
Appreciate it, Ed.
And
Thank you.
Thank you so much.
Thank you, sir.